Well, hello everyone, and welcome to the Alamo Mortgage Holdings webinar. We've got an exciting webinar where I'm going to go through some of the features and benefits when you make the wise decision to purchase corporate income bonds from Alamo Mortgage Holdings. I'm going to talk about how we can help you build up to very significant levels of passive income over the next few years when you participate in our annual investment program. So let's go through how it works. First of all, my name is Benjamin Z. Miller, and I am the managing director and the founder of Alamo Mortgage Holdings. And this is a company that has a lot of benefits for investors in the United Kingdom. If you're an accredited investor in the United Kingdom and you are thinking to yourself, I would like more passive income. I really would like a way that has a realistic chance of doing that. I know that government bonds aren't paying enough. What in the world is there that's safe? That's the important thing. What is there that's safe? Well, good question. Let's get started. First, we purchase mortgage debt. We purchase packages of mortgages. So all of our bonds are backed by hard assets, by real collateral, a big, big advantage to Alamo Mortgage Holdings. We actually, even though we're a United Kingdom company, we focus on buying mortgages in the United States in one state, the state of Texas, and I'll go through why we do that in a little bit. But let's start out with how our program works. First, you come to us maybe with an idea on what your passive income goal is. Maybe you have a goal of, I'd like to get 10,000 pounds a year in passive income in retirement. Maybe you'd like 5,000 pounds a year. Maybe you'd like just another 1,000 or 2,000 pounds a year. Whatever your goal is, we then determine how many years you are away from retirement. You let us know on that, kind of what your timeline is. And then once we know that, we are able to work with you to develop an annual investment program where each year you can purchase a certain number of bonds to reach that target. It's a great program. It's one that if you're watching this on the internet and you want more information, just send me an email, ben.miller@alamomortgageholdings.co.uk. So first, I'm going to do a disclaimer. It is so important. This is an investment that is only suitable for investors that are accredited. As accredited investors, you will be aware that all investments carry some level of risk. This investment is only available to investors who are able to assess their own appetite for risk. Please read the risk statement within the investment memorandum before investing. Okay, so how does it work? Well, you can earn 8% passive income. Once a year, we set the rate, and you can lock in that passive income for 3 years, 5 years, all the way up to even 50 years. I'll talk about how that works with you. Basically, we have an experienced team. You can look at our website. You can look at all of the people. Just go to www.alamomortgageholdings.co.uk. You do not need a U.S. bank account. We are a UK company. You can purchase the bonds in the United Kingdom. The bonds can be denominated in either pound sterling or US dollars, and we will handle that conversion for you for free if you prefer to convert to US dollars. And we'll talk about why someone would do that in a little bit. So let's imagine that you purchase over a few years. Maybe you do this over 5 years or 7 years or 10 years, whatever it might be. You purchase a total of 750,000 pounds in bonds. You would be able to earn potentially 5,000 pounds monthly for up to 50 years if you're buying the 50-year bonds that could supplement your retirement. It is fantastic, folks. I see so many people today that get stung by cryptocurrency. They are so excited about being the next cryptocurrency millionaire, or they think that they're going to do day trading in retirement. I wish you good luck if that's your plan. I wish you good luck, because there are many people who have attempted that where the results have not worked out so well. However, if you're not wanting good luck, if you're wanting something that makes good sense, then Alamo Mortgage Holdings is for you, because our program is based on old-fashioned principles. And that principle is we are securing the debt by hard assets. Your bonds are secured by hard assets, by real estate. Now, why in the world would a UK investor even want US debt? I mean, why don't they just get some UK debt? Well, folks, there's nothing wrong with buying UK debt. It can also be a valid strategy. And I've got friends that do that, and there's nothing wrong with it. But there's something that you should think about hard if you're a UK citizen. And I'm going to show something here that a lot of people don't talk about for some reason, but it's very important to see the long-term trend. We're looking here at the exchange rate between the US dollar and the British pound sterling. And if we go back to 1945 at the start of the Bretton Woods Agreement, at that time, 1 British pound would purchase 4 American dollars. So you trade in a pound in 1945 and you would get approximately 4 American dollars. It's not that way anymore. In the year 2023, if you trade in a pound, you're going to get only $1.21. So what happened? How did the pound lose so much relative to the dollar? And does it even matter? I mean, you're in the UK. What difference does it make? Well, let's think about that. Let's imagine you could get an 8% return that's denominated in British pounds, or you could get an 8% return that's denominated in US dollars. What might be better? Well, that's a great question. Let's imagine that this trend continues of the British pound continuing to lose and lose and lose compared to the American dollar. It would be a very beneficial situation if instead of having it all of your portfolio in British pound, you might want to think if it makes sense to diversify your currency. Now, clearly the past can't predict the future. You know, the fact that for the last 55 plus 20 plus years, for the last 65 years on average, the trend of the British pound versus the US dollar is that the pound is going to lose and the dollar is going to win. Now, maybe the trend will reverse. Maybe new leadership is going to reverse the trend. We don't know. We can't predict. But if you were a betting man and if you had no other information, you would be wise to think maybe I shouldn't hold all of my currency in British pounds. It's just something for you to think about. And the great news is we make it easy for you. You can purchase our bonds. You can purchase our bonds, get on our annual investment program. Maybe you invest, for example, 100,000 pounds a year. Maybe you invest 50,000 pounds a year. If you want to test it out on something smaller, we can work with you as long as you're an accredited investor. Basically, you purchase the bonds, and on that day, you tell us if you want to be in dollars or pounds. If the answer is I'm nervous about the pound and I want to get into dollars, we can supply you with a dollar lifeboat. And if you're the opposite, if you're confident that the British pound is going to come roaring back, well, more power to you. And we're happy to sell you in pounds. Whatever you're looking for, we can work with you. Or if you don't know, do half and half. It's easy. Basically, that way you can get some diversification in your currency. At least you've got some options. Now, sometimes when I talk about buying mortgages, the first thing people think is, oh, wait, that's a good idea. I should just go do this on my own. What do I need that Alamo Mortgage Holdings for? I know how to buy mortgage debt. Basically, you buy it. I understand. Well, folks, that is something that's interesting. You can do it on your own, but let's imagine that maybe you're a dentist. Maybe you're some sort of a skilled professional that invested many years of your time learning your craft. Do you think that if you worked more in your core profession, you'd be more successful compared to trying to learn a new profession? Well, buying mortgage notes takes a long time to get good at. And one nice thing about it is when you're working with Alamo Mortgage Holdings, you've got a team that's working for you. Wouldn't that be nice for once to have a team that's actually doing their job and working for you? When you invest with Alamo Mortgage Holdings, you get that. You can avoid all of the learning curve, all of the mistakes. But essentially, if you're going to buy mortgage notes, you should know that there's a lot of factors that drive it. There's primarily 6 factors. There's the buyer. You need to know, who is the buyer? How's the quality of the buyer's credit? That's important. You need to know what's the value of the collateral. You can't just look at the face value of the note. And even if you see a note floating around for $200,000, and you think you're buying it for $100,000 and you're thinking to yourself how smart you are, imagine what a disaster it would be if the collateral backing that note was only $25,000. Oh, that wouldn't be fun. The buyer's equity. You need to figure out how much did the buyer put down? Did they put down a little down payment or a big down payment? Well, a big down payment means they're less likely to leave. What about the terms? Would you prefer a high interest rate or a low interest rate? Well, if you're the buyer, you want the high interest rate. What about the history? Are they making payments? Is it a new note? Is there any history? Don't let, these things are important. And then of course the paperwork, was the transaction closed properly with attorneys? Was there a title company involved? All these things are so important, folks. They are just critical. But the great news is when you work with Alamo Mortgage Holdings, you don't have to hassle with any of that. Our team takes care of it. Here's an example. Let's say there's an asset that had a sales price of 120,000. Say the buyer came in and put 20,000 down. Say the seller financed the buyer a debt of 100,000. Okay. Now imagine that they agree on a 10% interest rate over a 30-year term. This is a monthly payment of about $877 per month. Imagine there's a history of 5 years. The payments have been made on time. Well, that is an unpaid principal balance on that note of $96,574. And let's imagine that at this 5 years after this deal happens, the seller, the one that still has that note, he asks the buyer, can you get refinanced, please? I'd like my cash. And the buyer says, no, I still have bad credit. I'm still self-employed and the bank still won't make me a mortgage, but he's paying on time with that mortgage. So the owner of that note starts typing in on Google. They type in sell a mortgage note for cash, and they get on the phone and they tell everyone, you know, why don't you pay me $96,574? This guy always pays on time. It's totally safe and you can earn 10%. And then what do you think happens, folks? Do you think that the note buyers say, oh, that's a great idea, I'll just pay you full price? No. That's not what happens. What happens is they say, well, we don't know about that. We think the paperwork is wrong. We think this, we think that. And then they make their offer. They make an insulting lowball offer. If they say, well, I'll pay you 60,000 cash. And then the person says, well, I'm not going to sell you the note for 60,000 cash. And then they negotiate back and forth and they decide that 83,322 is a workable deal. And then that note, like a snowflake, gets added with many other notes into a big package of notes. And that's how that all works out. Why bonds? Sometimes I get people and they tell me, you know, Ben, there's inflation. There's a lot of inflation in the world. And why would I buy a bond if there's inflation? Well, good question. And rather than me telling you my opinion, I'm going to talk about a Nobel Prize winning economist. I'm going to talk about Harry Markowitz. And if any of you have accounts at Goldman Sachs, or if you have accounts at Bank of America, or if you have accounts at Merrill Lynch, they just love the work of Harry Markowitz. Actually, a lot of the portfolios that they recommend, you'll be happy to know that at its core foundation, they are resting on Harry Markowitz's work that he won the 1990 Nobel Prize for. Well, that is all very interesting that he created this complicated modern portfolio theory, and it has a lot of math in it. But what did he do with his own portfolio? Did he use all that math in his own portfolio? Well, folks, I'm here to tell you, he liked things simple. Once a year, he would do an adjustment on his portfolio. He'd put half his money in stocks and he'd put half in bonds. Now, I'm not saying that just because a Nobel Prize winning economist that developed many of the foundations that all the modern portfolios are balanced off of, even though he did it that way, maybe that's not right for you. Maybe you need something more complicated. Maybe you need some calculus. Maybe you need some differential equations. Maybe you need experts to help you. That's possible. Or you might just think about what Harry Markowitz did, where he put half in stocks and half in bonds. And you might ask yourself, what percentage of my portfolio now is in bonds? What a great question to ask. And if you calculate it and you're coming up with a number like 0%, and believe me, I find a lot of people that have 0%, where they've got it all in stocks, where they've squirreled it all away into cryptocurrency, just convinced that they know what's going to happen with Bitcoin and with all these other currencies. But if you like something reliable and proven, you might consider being like Harry Markowitz. Harry Markowitz, once a year, adjust it. And if you need help adjusting it, you get in touch with me. You send me an email, ben.miller@alamomortgageholdings.co.uk. Love to show you what we can do. I can do a full presentation for you as well. So basically the idea is if the stocks go up, you sell stocks and you buy bonds. And if the stocks go down, you buy bonds. If the stocks go down, you sell bonds and you buy stocks. But you can't do that if you put 100% of your money in the stock market. So why Texas? Why do we do this just in Texas? I mean, America, the United States is such a big place. Why don't we buy notes in New York? Why don't we buy notes in California? Well, folks, if you're going to do anything and you're going to be good at it, you should start and get good at one thing instead of trying to take on everything. So Texas has many advantages. It's a state that's winning. People are moving into Texas. The real estate values are going higher. And when the real estate values go higher, the collateral value goes higher. And when the collateral value goes higher, are the bonds that we have that with our investors, they are better secured. And we want our investors very secured. And that's why we chose Texas. Also, our team has a strong background in Texas. You should look at the team members on our website, www.alamomortgageholdings.co.uk. You're going to love the team that I put together for you, folks. So what are the advantages? Well, we can get you to your passive income goals more quickly, but we can't do it without your help. If you want more passive income, you've got to contact us. You've got to let us know your situation. Let's have an exploratory conversation with no pressure. No pressure, folks. Just send me an email, ben.miller@alamomortgageholdings.co.uk. We also offer maximum diversification. You're not just getting one mortgage note. With our system, you are getting access to a variety of mortgages, which includes residential and commercial in the state of Texas. What about fees? Well, guess what? We don't charge our investors any fees. We don't believe in it. Now, I'm not saying there's anything wrong if you want to go with one of the fancy places and let them charge you a lot of fees. If that's fun for you, you can do that. But if you're a little bit of a smarter investor where you actually care about your money, you might weigh if that low-cost index fund, because I hear so many people, they're like a broken record bragging about their low-cost index fund. Well, folks, I'm proud that you have a low-cost index fund, but I think no fees is better than low fees. It's something you might consider. But whatever you want to do, you can do both. If you want to have the low-cost index fund and the Alamo Mortgage Holdings bonds, that's a great combination. I mean, a lot of things can work. There's many, many different roads lead to Rome. Many different roads lead to Alamo. We also offer interest payment flexibility. We can work with you. We've got a great team. I'm not going to go through everyone in this presentation, but you can look on our website, www.alamomortgageholdings.co.uk. You can learn more about our team. We are here to work for you. We're going to do a great job for you, folks. Just get in touch with us, and I'm going to go through a few things real quickly. Why should you invest in the notes if you want more passive income? How long is the term? 3 years, 5 years, all the way up to 50 years. Can you put the notes into your self-invested personal pension? I see no reason that you can't, but it's up to your provider. What type of an investment is it? You're buying corporate income bonds. You're not buying government bonds. Is it a regulated product? No, we are not a regulated product. At some point in the future, we may become regulated. We may go through that expensive process. But right now, our bondholders, they would prefer the higher rates of return rather than if we had gone through the full regulation. Now, that doesn't mean in a few years we might not do that. But it's one of those things where we are not a regulated product. And that's part of the reason we can pay so much more to our bondholders. Who can invest? Accredited investor, sophisticated investor, self-certified investor, institutional investor. Come one, come all to Alamo Mortgage Holdings. How is your money protected? We have multiple layers of security, and I'll go through that with you on a one-on-one call. Can you invest with a company? Are joint applications permitted? Yes and yes. How's it different from a loan and a corporate loan versus government? Well, I mean, it's just this is a corporate entity that's doing this, not a government. How's the tax managed? We pay all the money to you, and then you and your tax professional can decide how much you should pay for taxes. We don't get involved with that. We just pay all the money to you. Are there any limits? We suggest starting with 100,000 pounds, but if you want to start with some lesser amount, we can work with you. We're easy to work with, folks. Can I get access to the money early? No. And the thing about it is, this is not a product like day trading, where you can, oh, I clicked here and I'm going to sell now. Oh, it went down, I need to sell it. That's not how it works. This is a product where if you're going to need the money back right away, you probably shouldn't buy this product. How will I receive the interest? It's simple. We're going to pay it to your bank account. You just tell us what bank account. We transfer it in there. How can I invest? Send an email to ben.miller@alamomortgageholdings.co.uk or give me a phone call. You can call me. I have a US number +1 for the United States and then 817-203-4160. I hope that helps and I wish you good luck with your investing.